If charitable giving is part of your financial plan, your IRA may be one of the most powerful tools you have, but it is also one of the easiest places to make an expensive mistake. A lot of people assume that if they want to leave money to a charity, all they need to do is name that organization as a beneficiary on their IRA and move on. But the reality is more nuanced than that. How you structure charitable gifts from an IRA can affect taxes, the timing of distributions, and what both your heirs and your favorite organizations ultimately receive. For example, if charitable beneficiaries and individual beneficiaries are tied together in the wrong way, it can create unnecessary complications for the people inheriting those assets. And if your IRA decisions are not coordinated with the rest of your estate plan, you may miss opportunities to make your giving more tax efficient. That matters because not all assets are equal when it comes to wealth transfer. In many cases, traditional IRA assets can be especially valuable for charitable giving because qualified charities generally do not pay income tax on those distributions, while individual heirs often do. So in the right situation, leaving IRA assets to charity and preserving other more tax-efficient assets for family members may help improve the overall outcome for everyone involved. There's also another reason this topic deserves a fresh look. Recent law changes under Secure Act 2.0 created additional planning opportunities for eligible IRA owners. In some cases, charitable distributions can help satisfy required minimum distributions, support causes you care about, and even be used in strategies designed to create lifetime income. That is why charitable IRA planning should not be treated as just a simple beneficiary form. It should be part of a broader conversation about retirement income, tax strategy, estate planning, and legacy goals. We've created a free checklist called Avoiding Charitable IRA Beneficiary Mistakes in 5 Easy Steps. You can download it below this video. The right charitable IRA strategy is not just about giving more, it's about giving more thoughtfully. And when your retirement assets are aligned with the rest of your plan, the impact can be stronger for both your family and the organizations you care most about.